Hey everyone, Ian King here, editor at Strategic Fortunes with your weekly market insights video. Joining me again this week, Steve Fernandez, also at Banyan Hill. Now, Steve, I don't know about you, but when I was a kid, I used to watch Sesame Street, and there was one segment that went, which one of these things is not like the other? So we're going to play a little game right now. The FANG stocks, Facebook, Apple, Amazon, Netflix, and Google. Which one of these is not like the other?
You got to say Netflix, especially if you look at their recent performance and how they're growing. It's hard to include them with the rest of those companies.
Right. Incredible. Facebook is $1 trillion market cap. Apple 2.5 trillion. Amazon 1.8 trillion. Google 1.7 trillion. Netflix 226 billion. It's about a tenth the value of these other huge tech growth stocks, but for some reason, they're still in the same acronym and investors still put them on the same pedestal as these other tech giants. Why do you think that is?
Well, they did kind of innovate, the way we consume video. Other than YouTube, which you can say, they're in their own realm. Um, you know, Netflix destroyed Blockbuster, so they were really an innovator in the past. But when you look at where they're at now, they're not really innovating much in terms of like societal trends or anything like that. They're just churning out new content.
Mhm.
So yeah, it makes sense why people would actually, assume that they're in that innovative group, but I don't think that that would be the case anymore.
Right. And Netflix recently released earnings that were underwhelming. Could you just elaborate more? I saw the subscriber growth number was down, wasn't as much as expected. The growth rate's something like 19% or something like that.
Right. So when I look at Netflix, first thing I look at is their subscriber growth, and it was really disappointing. I mean, the quarterly subscribers came in at like 209 million, and that's
Mhm.
only up 8% over the previous year. So yeah, their revenue is growing 20% or so, but a lot of that is coming on the back of higher prices. So yes, it's good that they can raise prices and they're not really seeing a material change, negatively speaking, in subscribers. But if you look at like North America, for example, they actually lost subscribers between quarters, which is really hard to believe. When you're thinking of a growth company, how are they losing subscribers in their biggest market?
I mean, many Americans are probably like me. I always thought cutting the cord, cutting my cable would also cut my cable bill. But then when you add up my Netflix subscription, Hulu, Disney Plus, ESPN Plus, I wound up paying more for my TV content than I did when I had a cable subscription. And Steve, what do you think about, Disney Plus or Apple's another streaming service versus Netflix? I mean, tell our viewers about where the prices are for some of these subscription services right now and why it seems like Netflix is just not able or won't be able to compete against Disney and Apple.
Well, Netflix is a lot more expensive. If you look at like their North American average revenue per subscriber on a monthly basis, it's like 14.50. And if you look at Disney, I mean, like Hulu, for example, is around $4. Sorry, not Hulu. Disney Plus is around $4, and ESPN Plus is around 4.50. So when you think about that, it's like how much higher can Netflix go with their prices? On the flip side, Disney can go a lot higher with their prices if they want. So from that standpoint, it's really hard to justify Netflix having that price upside. Disney might actually be a better play when you even look at their revenue growth in streaming, but also their subscriber growth. Like the recent quarter, their subscribers were up 116% year over year, and they're really almost at 75% of Netflix subscribers now, which is pretty
Yeah,
hard to believe.
I agree with that. And I would also add for, Disney shows, especially ones that are focused on children, there's a lot of more merchandising impact effects of it. Disney has obviously the Marvel franchise, the Star Wars franchise right now, and they're able to monetize, that entertainment content that you see on TV in other ways rather than just streaming services. I mean, we've yet to see Netflix really monetize that brand, although they're talking about now releasing mobile games for some of their franchises. I heard that they're in the works of doing a Stranger Things mobile game app. Is that a game that you think you would, you're a gamer, Steve. Is this something that you would download and start playing on your phone?
Not personally, but I do think that people will. I don't know how much that, changes the investment thesis on Netflix, but it could help, retain loyalty, kind of like we discussed earlier. But even then, I mean, they're not going to become a gaming company. It's just going to be a supplement to their current business.
Yeah. And, we like keeping things the way they are. So we've got the FANG acronym, FAANG. Can we just replace Netflix with another N company? And if so, what do you think is the idea there?
Right. We both talked about it. NVIDIA, it really should be the N company in FANG. They're at the front of every huge trend that we're seeing now. Their technology is really heavily used in almost every artificial intelligence application, self-driving cars or, any machine learning algorithm really is using NVIDIA's technology. So, I would think that they would be at the front of innovation, and wouldn't they be included in the FANG instead of Netflix?
Don't forget about NVIDIA chips and cryptocurrency miners, Steve.
Oh yeah, absolutely. So I think that cryptocurrency is just another innovation. So, NVIDIA is at the front of that for sure.
NVIDIA right now trading at a market cap of 500 billion. That's double Netflix's. I do think that it would be, a more valuable entrance to the FANG acronym than Netflix. So tell us what you think about Netflix in the comments below. We'd love to hear from you. Any other questions that you might have about Netflix or any questions in general that we might be able to answer on future webinars, please hit us up in the comments. As always, if you like what we had to say today, hit the like button. If you disagree what we had to say today, but it made you think, also please give us a like. It helps us share our videos out to other viewers on YouTube. From myself and Steve Fernandez, thanks for tuning in. Have a great weekend.